everyone, this is Ray Reyes, president and founder of MI Real Estate with a real estate investing update for you. So before we get into today's topic, on a personal note, as many of you know, in mid-August I published a book called Bluff, the Bottom Line Up Front about passively investing in multifamily properties. And I'm very happy to announce that it is a #1 international bestseller. So excited about that. Really, where it got a lot of traction was knowledge capital, and that's really important to me because the point of this book, when I wrote it, was to provide knowledge, to provide something besides just a book that maybe is for my own self-interest. So I'm glad that people see it as something that they can use to better themselves. And as described by an Amazon reviewer, quote, "Bluff has no fluff," end quote. It is straight to the point on the inner workings of real estate syndication. And as I mentioned before, this is actually one of my preferred methods to acquiring property or for acquiring property because you can do it with others. You don't have to have all the money, but yet you can still scale to the requirement to really make some decent returns. The scale of the investment is important on the multifamily side. So I will mail a free copy of this book to the first 5 new subscribers on here in YouTube that mention the book. So subscribe, press the bell to receive notifications on new videos, mention the book in the comments below, and email me where you would like the book sent. And voila. So here's the bottom line up front on this update's topics. 1, we are likely in a stock market bubble. Consider diversifying into real estate assets before the reckoning comes. If you don't know what I'm talking about, just take a look at the stock market in the last few days. It's been crazy. Any tweet, any activity, it's up and down. Not necessarily the best place to have all of your eggs in this stock market basket, if you will. And we're going to go into some details on that later. 2, my preferred real asset is residential real estate, and it boils down to simple supply and demand. People need to live somewhere, and I've mentioned this before, and construction is not keeping up with demand. So prices keep going up. And here we go. So let's talk about the stock market. After the first week of September ended with 2 consecutive days of losses for major stock market indices in the U.S., fears of a deeper correction are mounting among investors. And they've actually gotten worse here in early October. It's always one tweet or something going on. One way of looking at stock valuations is the market value of all publicly traded companies as a percentage of GDP, which Warren Buffett described as the best single measure of where valuations stand at any given moment. We can get a decent measure of the overall stock market valuation with the very broad Wilshire 5000 index. As the following chart shows, the ratio of market capitalizations to GDP is even higher now than it was shortly before the dot-com bubble burst. Using quarterly average closes of the Wilshire 500 total market index and dividing it by quarterly GDP figures shows that the ratio is unprecedentedly high at the moment, which following Buffett's rationale could be seen as an ominous sign of things to come. So for those of you with all or most of your eggs in the stock market basket, it may be worth your time to consider diversifying into residential real estate and other hard or real assets. But why residential real estate? It's as simple as understanding supply and demand. And here's what I mean by that. The National Association of Realtors recently released a report finding that existing home sales reached a 14-year high in August. Furthermore, Bloomberg and Business Insider reported that if homes continue to sell at their current rate, the U.S. could run out of inventory in just over 3 months. The shortest time frame in records dating back to 1963. Housing scarcity is nothing new, but actually the California fires combined with what we already had going on with COVID has actually exacerbated the problem. According to Lawrence Yun, chief economist for the National Association of Real Estate, scarce inventory has been problematic for the past few years, but this has actually worsened in the past month due to the dramatic surge in lumber prices and the dearth of lumber resulting from the California wildfires. He says, over the recent months, we have seen lumber prices surge dramatically. This has already led to an increase in the cost of multifamily housing and an even higher increase for single-family homes. Yoon says the need for housing will grow even further, especially in areas that are attractive to those who can work from home. Many of us expect that remote work opportunities, accelerated by COVID-19, are likely to become a growing part of the nation's workforce culture. And so ultimately, according to Yoon, housing demand is robust, but supply is not. And this imbalance will inevitably harm affordability and hinder ownership opportunities. This is what I've been talking about for a while now. So this is important for us to get our heads around and understand why, you know, despite the fact that many people believe that, pricing for houses and for multifamily is too high, well, when you take everything into account, it really isn't. And to expect that we're going to have this immediate or this substantial fire sale on properties in the next year is a little bit over the top. And even if there are a ton of companies out there right now that have the ability, and their focus is to invest billions of dollars to buy up single family homes. Do you think as a small time investor that you're going to be able to compete? You're not. If you get lucky, if you're talking to the sellers directly, then maybe. But, you're competing with a lot of horsepower. So don't expect that there's going to be this huge change in pricing that's going to make things all of a sudden affordable for you. This isn't, and I said this before as well, this isn't the last recession where we had an abundance of supply. I mean, when you have a ton of supply, you have the opposite problem. You don't have enough people buying, and thus prices went down substantially. That's not where we're at right now. Things are getting worse, people. So don't stop investing or hold on to your investments. Hold off on investing rather, because you're expecting some sort of super deal. I just don't see it. Well, folks, that does it for this update. I hope it's been useful to you, and that you've got a chance to think about a few things here. I really do believe that a lot of people, because they feel like real estate investing is hard, they rather take the risk of the stock market. And I don't think it's that hard. I mean, reach out if you've got questions about that. There are ways to invest in real estate that are fairly straightforward. It's not quite like buying something on the stock market, but that delay, or that, I guess, that extra bit of work that you're doing is so worth it when you don't have to worry about the madness that's going on right now with the stock market. I mean, the way we're printing money. I mean, what do you think that money is coming from? It's just basically being created from thin air, and that's going to come back to bite us. And so, if you think these valuations on a stock market are a fallacy, they're just not real, and I tried to prove that to you, then I strongly suggest that you start looking at other ways to invest your money. Leaving it in your mattress is not going to work, because you lose money just on inflation alone, and inflation is expected, despite everything that the Fed is saying. At some point, we're going to see a ton of inflation, because again, we're just creating money. There's no value behind it, and so that's gonna trigger something in the future here. As always, if you want to chat about this, I'm happy to do so. I mean, there are other ideas. There are people that, have, there's some intelligent people out there that have some other perspectives. But I just encourage you to at least do the research. And there's nothing wrong with diversifying. A lot of people do it. So reach out if you've got some questions and you're thinking about investing, but you're not exactly sure. Definitely reach out. You can find me on social media through my website, www.mirealestate.us, mirealestate.us. There you can find all of my social media. And as always, folks, don't forget to like this video, subscribe to the channel, and share it with others. I spent some time doing this and doing some research, so I hope that this has been useful and that you can actually get more of it and have other people see it as well by sharing. So that's all I have. Like I always say, invest where it makes sense, folks.